This is Eric Mwathe with Mwathe.com. Half an hour before the close, Wednesday, the 5th November 2008. Markets right now trading around 350 points to the downside. Now, if you had come into this week short the market, the last 2 days were very painful. The market, in a way, outstretched the rebound from the lows in most recent lows on October 27th. I mean, the shorts were really feeling the pain. As it is right now, net, the market is negative for the week. So those who went long the last 2 days or even Friday, I'm hoping they took some money off the table, because the market is very good. It gives you fake buy signals. They look very real on the charts, and you act upon them only to find that they're only going to give you a small window of opportunity to make profits on the upside, and then you have to cover. You have to take your profits very quick in a bear market. And so now we see it only took 2 days for us to turn negative. 1 day to turn negative for the week. Here's a little bit of caution. One of the reasons why the market is down a lot today is because we moved below the 50 level area on the Dow and the S&P 500. We closed above 50, which explains why we were up big yesterday, and now we are back trading below 50 again. Usually that means a big change in sentiment, which needs a big number in price so that this can happen, moving below 50 on the RSI or above it. But anyway, don't be surprised if you see another big update tomorrow to form a double top before we head lower. That's one of the scenarios. But right now, yesterday we went above 50, now we are below it. We could as well head down, because I think ultimately the direction is still lower for now. But don't be surprised if we make a double top like that before we head lower. That is very possible, which means tomorrow might be another up day just to confuse everybody. So either we take that scenario, or we just go straight on with this scenario over straight down after struggling to move above the 50 level area. Quickly, let's look at the S&P 500 daily chart, and basically this is what I'm talking about. On the RSI, you see we just moved below 50. Now we are trading around 46. Yesterday we closed above 50, which explains today the big almost 3.7% down day. On the daily, that's pretty much what I was looking at for short-term indication. These are the Qs, the quad Q chart, and this is a daily. Again, we see resistance on the price channel right there. That's a resistance. And then this is a pharmaceutical index. This is one of the few that I noticed as of today. You see this on the RSI. You see the gray line, which is based on this trend here. That is based on this multi-year lows. Now that trend is being breached as we speak right now. So that's a material breach. We'll see how that holds, but that usually sentiment-wise, it's very early. It just tells you that all this move, the sentiment that took this move from here to here, that sentiment has been broken. It does not mean that price is going to reflect that immediately, but it just shows you that that kind of euphoria has been broken by today's move, assuming we close lower, which more than likely seems to be the case. I've been talking about Goldman Sachs since Monday. Goldman Sachs is right now, this is a daily, it's trading around price channel support dangerously. As long as it's holding, that's fine. But like I told you, if you see Goldman Sachs trade below 88.53, 88.53, that means that it is trading or about to close at the lowest weekly level and the lowest daily level in more than 5 years, and I would go short Goldman Sachs as long as it's trading below 88.53, and I would cover my short if it closes above 88.53. Now that's my thinking for Goldman Sachs. It looks very dangerous to me. And also watch the RSI support line. This RSI support line on Goldman Sachs, if it can't hold this support, then it's going to be pushing this RSI to the oversold level again, and that's not going to be good in terms of for those who are long Goldman Sachs. Now for now, one of the ways we can also play this market move today is to